There are very few things the whole world will agree on. One of them is the fact that Warren Buffett knows how to make money, lots of money. So when he does something or not does something, it's always worth looking at. He's known for taking lucrative stakes in Goldman Sachs, General Electric, by swooping in when others panicked during the last financial crisis. That's what great opportunities do, great investors do. When they see an opportunity when no one else does, they take advantage of it. So when stocks tanked recently, everyone expected Buffett to be taking over or buying in. But he's keeping $100 billion closer to his chest and looking for alternative investments because there's more than $100 billion that isn't enough. His reasoning is simple. This economic crisis is different from the ones we previously had. In his annual shareholder meeting, Buffett said he didn't see anything attractive. He said that the deals in 2008 and 2009 weren't done to make a statement to the world. They were done because they were intelligent and markets were ready, and that he didn't feel that he had a lot of competition. The famous investor's reputation allowed him to serve as a lender of last resort during the 2008 financial crisis, racking up deals that generated 10% annual dividends from household name companies. But as panic and the virus and shutdowns assaulted equities in March and even began to freeze debt markets, the Federal Reserve beat him to the punch with an unprecedented set of emergency measures. He did say that even before the Feds issued the decision for a bailout, he was already getting a lot of calls. He didn't bite, which people take to be a sign that he doesn't think we have seen the worst of the pandemic's economic effects. Buffett, Berkshire Hathaway's chairman and chief executive officer, said he couldn't promise Berkshire would outperform the S&P over the next decade, but he vowed not to be reckless. He's looking long-term, not knowing that investors are looking at what's happening out there. James Armstrong, who manages money, said that Buffett makes a calculation of price to value. Either he sees in a good investment or he doesn't. Buffett's businesses haven't been spared during the effects of the shutdown. The railroad BNSF reported reduced volumes, and the COVID-19 disrupted their commerce. Apparel industries, footwear were hit 34% declines in the first quarter. Buffett said that there will be some small Berkshire units that will reopen after pandemic, and Buffett confirmed this, stating that Berkshire was never willing to prop up a business amid unending losses. There are businesses that were having problems before, and they're having even bigger problems now. You may not have billions like Buffett, but there's a lot to learn from him and how he's treating his money. One, we can't model this economic crisis to the previous ones we've had. This one is different because the global economic climate is also different. The dependencies we have now didn't exist a couple decades ago. New technologies are being developed that shift our needs and spread our economic control. Banking systems are changing, money is changing, more importantly, culture is changing, and that's dictating people's priorities and their lifestyle. Number two, you can't continue to use the same financial strategy you used before and expect it to work. COVID-19 crisis is not just a disturbance, it's a game changer. We're not going to go back to the way things were. We're evolving because COVID-19 is forcing us to. Number three, there's no formula that can tell us exactly what we need to navigate this pandemic and save ourselves. Taking risks is inevitable, but it doesn't mean we can't take measures to guarantee that our investments will still be protected. Buffett's priority is to first protect what he has. He's not about to buy stocks, even though he's a billionaire and he can do it in the first place. You should too. You should be cautious. Don't be so passive as to sit on your cash. You need to get out and help. You need to stimulate the economy, but you got to be sure about what you're investing into and make sure it's right. First, you got to protect what you have, especially if you're looking very closely at retirement or near to retirement. Metals, precious metals have done very well. Gold, silver, platinum, palladium, and these investments have proven to be very stable in these unstable times. There's never been a better time to get into a safe investment like precious metals. The time is now. If you want to learn how to get into gold, silver, platinum, palladium, you want to get some free information, check out our website. It's noblegoldinvestments.com. That's noblegoldinvestments.com.